Welcome back to Morning Trade Live. I'm Nicole Petalides. We're moments away from the opening bell. Want to get the big picture for you. Peter Andersen, Chief Investment Officer and founder of Andersen Capital Management, is with me. Some of your thoughts on the trading day ahead. How are you feeling this week?
Well, very good. Of course, all eyes are on NVIDIA this evening, so that should probably take a lot of people's attention. However, I think the focus on the Fed situation will also be very important, and I think the time has come to actually look more closely at the Fed situation. You know, before this, we were looking at how the government collects its economic data. And there's been some discourse about that. And I always think it's healthy to review these processes and the systems we have in place and give us more confidence on the end, coming out of the end of that tunnel.
Okay, at this point now, look, I mean, right now, the thinking is that the Fed will cut in September. 90% likelihood I saw this morning. I know it's sort of fluctuated all over the place. But it's seeming more likely than not. Is that the right move by the Fed to do that? Are you worried about labor and or inflation?
I'm always worried about those things. And I will tell you that I think this movement, the pressure that is on the people that look at interest rates is enormous right now. And I do not think, I'm in the minority, I'm in a very lonely room here, but I do not think it is the right thing to do to cut rates. I think that we still have to see how the tariff situation plays out. You know, we're not even in, say, the third inning, to use a baseball analogy, about how these tariffs are going to impact the economy. So if I were the Fed, I would say, I know I'm under a lot of pressure, and there is this relentless narrative to cut rates, and not just cut rates once, but a campaign of cutting rates. I just don't think the data points that strongly and unanimously to that direction right now.
So tell me how a portfolio is looking in your mind for the next 6, 12, 3 years. I was going to say months, and then I went on to a more long-term portfolio. I mean, how do you navigate through this?
Yeah, it drives a lot of people crazy, and I think one of the things you have to do is say to yourself, all right, there is all this continuous noise, you know, the gossip, if you will, about the Fed, how tariffs will play out. And so if you have a semi-long-term outlook, okay, so say a year to 2 years, you have to ask yourself, what are the investment themes that I think are not very responsive to these hot topics right now? And so one of them, in my mind, is data security, you know, cybersecurity. This has been grossly overlooked, especially in the eyes of the development of artificial intelligence. You know, we all like to talk about the good things that AI will bring to this world, but we also know that it's a double-edged sword. And when the bad actors get a hold of the latest AI applications, you can bet that they're going to use that in a more sophisticated hacking policy. So there you go. There's one sector that I think will never end in terms of demand and growth.
Right, understood. I mean, do you feel like, you know, that you're talking about some of these names? Some names, for example, I was listening to somebody this morning who thought NVIDIA was fully priced. With the group you're describing, do you think there's room to the upside?
Absolutely. And, you know, you have to look at history and human behavior about the fear of the unknown. So it has been some time ago, actually about 25 years ago, but when you look at the Y2K debacle, there was so much defense being built up about that as we entered into the year 2000 that people that were in charge of risks at corporations never felt that they were secure enough that they would sign off a certificate that said, okay, we've done everything we could. And it's the same psychology, and not just psychology, but actual technology that applies today with artificial intelligence and its potential attack on a company. If you are the risk officer at a major company, say a bank, for instance, and you're directing your board of directors, you're presenting to them, and they ask you, okay, Peter, are we totally protected against all AI threats? it would be a career risk to say, yes, we are, and we need no more funding. We are totally up to date. There will always be a new risk. There will always be a new defense, and it's like an arms race. And for a stock investor, that is a free gift.
And what are your names that you recommend just generally, that are some of your go-to names then?
Well, we own Palo Alto Networks and CyberArk. So about 3 weeks ago, you recall that there was a transaction done between those two companies. Palo Alto is buying CyberArk, a very rare thing in my portfolio to have two stocks be involved in the acquisition. Normally, if I'm lucky enough to have that happen, I usually own the acquired company, which goes at a premium. And if you look at the response, the market response of those two, that transaction, it really has been muted. And I think it's because there's so many other sexier headlines to look at. But this is a marriage made in heaven. There's been a lot of critics about it, but those two stocks, in our opinion, are highly recommended in a portfolio. And we also hold CrowdStrike, which this evening also will be releasing its earnings. And one last thing about earnings. Of course, I look at earnings, but it does not usually determine the next step I'm going to take with that stock. Because if you just look at earnings in isolation, I don't think you're benefiting your client or your intellect, frankly, by having a complete thesis of the stock holding.
And when you think about other groups, I mean, financials, healthcare, energy, do you have any go-tos in those groups?
I do, certainly. In healthcare, for instance, we like to find names that have great balance sheets, paying down their debt, for instance, so almost the way a bondholder would look for a company. But that is the first quality. And the second quality we look at is whether or not this medical instrumentation is somewhat unique and has a great addressable market growth. So one of our top holdings is Insulet. The ticker is POD, P-O-D-D. That delivers diabetic medication automatically to type 1 and type 2 diabetic patients. So there's a company that we think is somewhat unique, doesn't have much competition because the way it delivers the insulin is in a so-called cordless process that you attach to your arm, and it's waterproof and stays on there for 3 whole days. So it's even very pediatric friendly in terms of compliance to the medication. So things like that we like. And if you would ask me, how are those stocks like Insulet going to respond to whether or not the Fed member is fired or if tariffs are high, I would say that the diabetic patients don't care at all about those things, and they will continue to purchase that kind of instrumentation.
Yeah, understood. Do you have your good old go-tos like dividend payers or, you know, those dividend aristocrats or legacy names that you've always sort of gone to?
We always look for not dividend payers. I mean, the strategy I run is a total return strategy. It's very concentrated. There's under 15 stocks in there. So we are actually looking for the big growers. And if they happen to pay a dividend in retrospect, all the better, but we do not usually have that as a defensive play. This is a strategy that is fairly aggressive, and we're looking always for the next NVIDIA. As an example, I bought NVIDIA back in this strategy in 2015 at under $1 price, and people thought I was crazy because nobody really understood the technology. And here we are now where NVIDIA is a household name. But along the way, it was pretty rough. You know, it was not always the poster child. And I also think that the CEO never imagined himself as being the figurehead for artificial intelligence. NVIDIA was first a gaming chip and a computational chip back in 2015 when we first discovered it.
And just big picture on the economy and the consumer for the holidays, things like that. Are you feeling positive?
I think the consumer, in spite of the fractured kind of data that we're getting about the consumer, I do think for the general trend, the consumer is optimistic, will be spending some more, and this holiday season I expect to be surprisingly robust, which of course if we do have the federal rate cut, then that will just add fuel to that fire, so to speak. And I think we should have a fairly good, optimistic ending to this year. Yes.
All right. Peter Andersen, Chief Investment Officer, founder, Andersen Capital Management. Thank you so much. A great conversation. A lot of names to watch, too. Great to speak with you.